What is happening, crypto fam, and welcome back to Bitcoin Bulletin. The market is absolutely electric, and the pace of innovation? It's like a rocket launch every single day. We've got game-changing developments on the Bitcoin network, institutional plays making waves, and shifts in investor sentiment that are turning heads. You do not want to miss what's unfolding right now. Get ready, because we're diving deep into the stories that are defining the future of digital assets. First up, a massive leap in privacy and scalability for Bitcoin as a major stablecoin issuer embraces a new protocol, promising to revolutionize how we transact. Then, we're looking at the power players in the ETF space and how they're reshaping liquidity for digital gold. Plus, prepare for some bold price predictions as analysts eye a staggering target for Bitcoin in the near future, backed by solid market trends. And finally, a surprising underdog is stealing the spotlight with an explosive surge, showing just how dynamic this market can be. Stick around, you won't want to miss this. Hit that subscribe button, ring the notification bell, and let's get into it. A new era for Bitcoin transactions. This development marks a significant evolution for Bitcoin, moving beyond its traditional role as a store of value to become a robust platform for programmable assets and private transactions. The integration of Tether's USD stablecoin onto the RGB protocol is a monumental step, promising enhanced privacy and scalability directly on the Bitcoin blockchain and Lightning Network. Unlike many existing stablecoin solutions that rely on complex cross-chain mechanisms or off-chain setups, this approach utilizes RGB's client-side validation and zero-knowledge cryptography. This means that transactions are validated by the user's device, minimizing the data recorded on the main blockchain and significantly boosting privacy. It also allows for the coexistence of Bitcoin and USD within the same wallet, simplifying the user experience and reducing the friction typically associated with moving assets between different networks. The implications are vast. Users can conduct private, potentially offline, transactions, which is particularly beneficial for individuals in regions with unstable internet access or those prioritizing financial sovereignty. Tether's CEO, Paolo Ardoino, has framed this as a move towards realizing Bitcoin's potential as the foundation for a freer financial future, emphasizing security and scalability. This integration directly challenges the dominance of Ethereum-based stablecoins, which often face criticism for high gas fees and smart contract vulnerabilities. By reducing reliance on third-party chains and lowering operational costs, Tether's move positions Bitcoin as a viable settlement layer for stablecoins and a broader range of programmable assets. Analysts are pointing to the sheer scale of Tether's USD, with its $86 billion supply, as a potential catalyst for widespread adoption of the RGB framework. This could accelerate the integration of RGB support across wallets and exchanges, making native Bitcoin stablecoin transactions more accessible. Furthermore, the ability to conduct these transactions privately and efficiently could open up new use cases, particularly in high-inflation economies and for mobile-first financial applications, further solidifying Bitcoin's global utility. But what does this mean for the broader institutional landscape and liquidity? We're about to see how the ETF market is fundamentally changing how investors access digital gold. Bitcoin ETFs reshape market liquidity. Spot Bitcoin ETFs in the United States have rapidly emerged as a critical liquidity source, with their trading volumes nearing those of major exchanges like Binance. According to Giulio Morno, head of research at CryptoQuant, on active trading days, these funds are generating between $5 billion and $10 billion in volume, establishing themselves as a primary gateway for investors to acquire Bitcoin. While Binance continues to lead in overall spot trading volume for cryptocurrencies, the collective trading volume of the 11 U.S. Bitcoin ETFs has reached approximately $2.77 billion, a significant figure when compared to Binance's $4.1 billion for Bitcoin alone. During peak market activity, Bitcoin's trading volume on Binance has soared to $18 billion, with Ethereum reaching $11 billion and Binance's total daily volume across all pairs exceeding $22 billion. However, the impact of ETFs is more pronounced for Bitcoin than for Ethereum. For Ethereum, spot trading volume is heavily concentrated on exchanges like Binance and Crypto.com, with spot ETFs accounting for only about 4% of the trading volume. This disparity suggests a slower pace of institutional adoption for Ethereum compared to Bitcoin. Despite this, data on inflows into Ethereum-related investment vehicles paints a different picture. Over the past 4 trading days, spot Bitcoin ETFs have attracted a total of $571.6 million. While inflows into Bitcoin ETFs have shown a slowdown since the beginning of August, Ethereum-focused funds have seen substantial inflows, attracting $1.2 billion during the same period. Last week, Bitcoin ETF funds experienced an outflow of $230 million, but month-to-date, net inflows have surpassed $4 billion. This robust inflow into Ethereum instruments, coupled with Van Eck CEO's label of Ethereum as Wall Street's token, and JP Morgan analysts highlighting reasons for its dominance over Bitcoin, indicates a strong institutional interest in Ethereum as well. Nevertheless, the immediate impact of U.S. spot Bitcoin ETFs on market liquidity and accessibility for traditional investors is undeniable, transforming how large capital enters the Bitcoin market. This massive influx into ETFs is just one piece of the puzzle. Get ready for some audacious price targets as analysts predict Bitcoin's next epic climb. Bitcoin's trajectory to $150K in 2025. Analysts are forecasting a potentially explosive future for Bitcoin, with projections suggesting it could reach $150,000 by late 2025. This optimistic outlook is largely underpinned by the inherent scarcity of Bitcoin and the increasing patterns of institutional adoption. The current bull cycle is anticipated to peak around this timeframe, extending the growth phase well into the first quarter of 2026, according to analyses that compare Bitcoin's performance to traditional market indices like the S&P 500. While the rate of growth per cycle may be diminishing, the duration of uptrends appears to be lengthening, indicating a maturing market rather than a loss of momentum. This evolving market structure, influenced by factors such as the introduction of Bitcoin ETFs, greater regulatory clarity, and the growing trend of corporate treasury holdings, suggests that traditional 4-year halving cycle predictions might be adapting. CryptoQuant's research highlights a state of liquidity scarcity on major exchanges, with a significant portion of Bitcoin supply held in long-term storage. This reduced availability of Bitcoin for trading is a key driver expected to exert upward price pressure. Analysts like UCHAIN suggest that if large holders maintain their long-term strategies, Bitcoin's price could indeed surpass $150,000 in 2025. However, they also caution that a sudden release of supply into a market with thin liquidity could trigger sharp price corrections. The stock-to-flow (S/F) model, a long-standing indicator of Bitcoin's scarcity-driven valuation, continues to be a reference point, with historical price rallies in 2013, 2017, and 2021 aligning with its predictions. While criticized for oversimplifying demand dynamics, it remains a robust framework for long-range forecasting. Technical indicators, such as the 200-week moving average, which has historically acted as a price floor, and the Relative Strength Index, RSI, used for identifying overbought or oversold conditions, are also closely watched. A Monte Carlo simulation by Diamond Partners estimates Bitcoin's minimum value in 2026, suggesting a low probability of falling below $41,000, with potential cycle lows exceeding $80,000. Macroeconomic factors, including the Genius Act providing stablecoin clarity and the SEC's Project Crypto aiming to modernize securities rules, are seen as catalysts that enhance Bitcoin's legitimacy and distribution. The increasing amount of Bitcoin held by corporations, now over 4% of the total supply, further tightens the circulating float. While the possibility of a 2026 crypto winter exists, strategies like dollar-cost averaging (DCA) are recommended to navigate the inherent volatility. But the market isn't just about the giants. Prepare for a shock as we reveal a tiny token that's exploded by over 700% while the big players stumbled. UCHAIN's explosive 700% surge amidst market downturn. In a dramatic turn of events that highlights the volatile and often unpredictable nature of the cryptocurrency market, UCHAIN has experienced an extraordinary surge of over 700%. This astonishing price action occurred while major cryptocurrencies, including Bitcoin BTC, Ethereum ETH, and XRP, faced significant declines amid broader market sell-offs. UCHAIN's performance starkly contrasts with the broader market trend, showcasing a dramatic investor rotation towards smaller, high-growth potential tokens. Currently, UCHAIN holds a market capitalization of approximately 406.29 BTC, ranking it around 846th on CoinGecko. Notably, its fully diluted valuation, FDV, matches its market cap, indicating that all 100,000 UCN tokens are theoretically in circulation. This alignment suggests that the token's current market valuation accurately reflects its total potential supply. Over the last 7 days, UCHAIN has shown a 0% price change, a remarkable feat when compared to the global crypto market's decline of -5.9% and the drop of -0.8% seen in similar Layer 1 cryptocurrencies. The trading volume for UCHAIN has also seen a substantial boost, rising by 72.6% in the last 24 hours to $1,994,740.60. This surge in trading activity, primarily on the BingX exchange, with the UCN-USDT pair dominating the volume, suggests increased market interest and liquidity for the token. Conversely, Bitcoin and Ethereum have been under pressure, with Bitcoin facing headwinds from macroeconomic uncertainty and gold's increasing appeal as an alternative store of value. Analysts interpret these divergent performances as a clear sign of investors seeking alpha in smaller-cap assets, especially during periods of volatility in the established cryptocurrency space. While UCHAIN's recent gains are undeniably impressive, it is crucial to acknowledge the inherent risks associated with such low-cap assets, including limited adoption, market depth, and the speculative nature of their price movements. This surge serves as a potent reminder of the potential rewards and significant risks involved in speculative trading within the dynamic crypto landscape. What a wild ride in the crypto world! We've seen a stablecoin revolutionize Bitcoin transactions, ETFs reshaping liquidity, massive price predictions, and a tiny token's unbelievable surge. Don't go anywhere, we'll recap it all in our lightning round. And that's a wrap on today's massive crypto news. We saw Tether bringing its USD to Bitcoin's RGB protocol for private, native transactions. Bitcoin ETFs are becoming a major liquidity source, potentially rivaling traditional exchanges. Analysts are bullish, predicting Bitcoin could hit $150,000 by late 2025, driven by scarcity and adoption. And in a stunning move, UCHAIN surged over 700% while major cryptos dipped. If you got value from this update, smash that like button, subscribe to Bitcoin Bulletin for all your crypto insights, hit the notification bell so you never miss a beat, and drop a comment below with your thoughts on these stories. Follow us on all social media platforms for more real-time updates. We'll see you in the next one.